In today's world, artificial intelligence is the new engine of progress, powering everything from your smartphone apps to cutting-edge medical research. At the core of this revolution are AI chips, specialized processors that enable machines to learn, adapt, and transform industries. One company leads this charge, Nvidia. Known for their graphics cards and gaming, Nvidia's technology now drives the most advanced AI systems on the planet. Their chips are the backbone for language models, drug discovery, and self-driving cars. The demand for these chips is immense. Every major tech company and nation wants them to stay ahead in the global race. But this race has sparked a fierce rivalry. The US, home to Nvidia, and China, with its vast tech ambitions, are now locked in a struggle for control over these critical components. A single decision in Washington can send shockwaves through Silicon Valley and Beijing, shaping the future of technology worldwide. This is the story of that pivotal decision. The US government has drawn a hard line, ordering Nvidia to stop selling its most advanced AI chips to China. This isn't just policy, it's a direct intervention, closing loopholes and tightening export controls. The move is the latest in a series of escalating restrictions, starting with bans on Nvidia's top chips like the A800 and H800. Nvidia responded by creating less powerful versions, such as the H20, for the Chinese market. But now, even these scaled-back chips are being blocked. The latest casualty, the B30A chip, which was supposed to be Nvidia's next big product for China. The US blocked its sale, even after samples reached Chinese tech giants like Alibaba and Tencent. The reason? National security. US officials fear these chips could help modernize China's military, develop autonomous weapons, or boost surveillance. By restricting access, the US aims to slow China's technological and military rise. It's a strategic move to maintain America's edge and keep advanced AI out of potential adversaries' hands. For Nvidia, it's a sudden halt in a crucial market. For China, it's a major obstacle in its quest for AI leadership. The flow of silicon has become a matter of international security. The stakes have never been higher. This isn't just about Nvidia. It's a front in a new tech Cold War between the US and China. Both nations are racing for dominance in AI, 5G, and semiconductors, seeing technology as the key to economic and military power. The US has used its tech leadership as leverage, blacklisting companies like Huawei, and now targeting China's AI ambitions. The strategy: create choke points by controlling the most advanced chip designs, manufacturing, and equipment. By doing so, the US hopes to slow China's progress in critical areas without crippling its entire economy. China sees these moves as attempts to contain its rise, calling them unfair and politically motivated. The result? Deep mistrust and a push for technological decoupling. Both sides are now building independent tech ecosystems, aiming to reduce reliance on each other. The world is watching as the two superpowers reshape the global tech landscape. The battle lines are drawn. To grasp the impact of these bans, let's look at the chips at the center of the storm, the H20 and B30A. The H20 was Nvidia's workaround for earlier US restrictions, less powerful, but still valuable for Chinese companies. Yet, its performance lagged behind unrestricted chips and even some domestic Chinese alternatives. Chinese tech firms found it underwhelming, and Nvidia faced growing competition from local players. Enter the B30A, designed to be more powerful than the H20, but still, Nvidia hoped, within US export rules. Samples went to Alibaba and Tencent, but before it could launch, the US blocked it. This signaled a shift. Washington would target any chip that gave China a significant AI boost, regardless of technical tweaks. The loophole was closed. For Nvidia, it meant losing its edge in China. For Chinese companies, it meant another setback in accessing world-class AI hardware. The message was clear. The US would not allow even incremental advances in China's AI capabilities. The chip war had entered a new phase. The stakes for innovation and competition had never been higher. For Nvidia, these restrictions are a major blow. China once accounted for up to a quarter of Nvidia's revenue, a massive market now at risk. The initial bans already hurt sales, but the latest rules threaten to cut off China almost entirely. Nvidia has stopped including China in its revenue forecasts, signaling deep uncertainty. Years of investment and relationship building in China are now in jeopardy. CEO Jensen Huang has warned that China could still win the AI race, thanks to cheaper energy and different regulations. Navigating shifting US rules is costly and unpredictable, forcing Nvidia to redesign products with no guarantee of success. The company is caught between government demands and commercial interests, complicating its global strategy. Lost sales, lost influence, and operational headaches are now the new normal. Nvidia is no longer just a tech leader. It's a pawn in a geopolitical chess game. The future of its global business hangs in the balance. For China's tech giants, Alibaba, Baidu, Tencent, the chip ban is a direct hit. These companies rely on Nvidia's chips for everything from cloud computing to AI research. Now they're cut off from the world's best hardware, slowing innovation and widening the gap with US rivals. Stockpiling old chips is a short-term fix. Relying on weaker, export-compliant chips like the H20 isn't enough for cutting-edge AI. The result, a growing technology gap. Chinese firms must either optimize software for less powerful chips or turn to domestic suppliers. But homegrown chips still lag behind Nvidia's in performance and reliability. The entire Chinese AI ecosystem, from startups to universities, feels the impact. Attracting top talent and conducting world-class research becomes harder. The US policy doesn't just hurt big corporations. It challenges the foundation of China's tech future. For now, Chinese companies face higher costs, lower performance, and a tougher road to AI leadership. The race just got a lot harder. China isn't backing down. The chip ban has only intensified Beijing's push for technological self-reliance. Massive investments are flowing into domestic chipmakers like Huawei's HiSilicon and SMIC. The goal? Build a complete, homegrown supply chain immune to foreign sanctions. But making world-class chips is tough. China still lacks access to the most advanced manufacturing tools, like ASML's EUV machines. Despite these hurdles, China's engineering talent and huge market are closing the gap. Companies like Huawei are already producing competitive AI chips for some uses. Ironically, US restrictions are accelerating China's innovation drive. The race for self-sufficiency is on, and the world is watching. The US-China chip war isn't just about two countries, it affects the entire world. For decades, global tech relied on cooperation and integrated supply chains. Now, decoupling threatens to split the world into rival tech blocs, each with its own standards and supply chains. This could mean higher prices, less choice, and slower innovation for everyone. Allies like South Korea and Taiwan are caught in the middle, forced to choose between security and trade. The rules are changing, straining alliances and complicating global business. At stake is who sets the rules for the 21st century. AI will shape economies, societies, and security. The US wants to ensure democratic values lead, but risks deepening global divides. The outcome will shape the future for us all. The US block on Nvidia's AI chip sales to China marks a turning point. This is more than a trade dispute. It's a clash of national ambitions, with AI chips as the new currency of power. For Nvidia, it's a struggle to adapt to a fractured world and shifting government demands. For China, it's a call to accelerate self-sufficiency at any cost. The US gamble may slow China, but it could also create a formidable rival. The era of seamless global tech trade is ending, replaced by strategic competition and new barriers. Innovation may slow, costs may rise, and instability could grow as the world splits into rival tech spheres. Companies, countries, and consumers everywhere will feel the impact. The decisions made today will shape technology, security, and progress for decades. The future of global tech and the direction of human progress hangs in the balance.